And you just think about how much interest rates have dropped. It's just wild. They're at 7.5%. What's a 1 year fixed rate at the moment? Like sub 4.5%?
Yeah, 449.
3% on like, I don't know, if you're buying your first home, it's like 700 grand. That's what, $21,000 or less in interest. And for a first home buyer, that's a huge amount of cash. We are back in your life, and today we got 5 reasons why now it is easier to buy your first home. Michael, the landscape is changing. It continues to move towards first home buyers in their direction.
Yeah. And, I'm not saying we're in the sweet spot, but we might be in a little bit of a sweet spot around how easy it is for first home buyers. We've had those greedy investors snatching up everything for such a long time. Interest rates went sky high. First home buyers started to creep out of the woodwork, starts, buying homes here and there. But then we've had interest rates come down, a whole lot of other stuff happen, which means that now might be a really good time if you're a first home buyer to get on into the market.
And the big thing as well is like, if you're like, oh, I think the property market has another 2% it'll drop, or actually it's not going to go up that much, like you're missing the whole thing. Like it's actually about not going, I'm trying to time the market, but going, where is all the information lying or the data lying at the moment? And if you're thinking about it over a long period of time, might not be a bad time to look at it.
100%. So let's jump into the reasons.
Number 1, interest rates. They have gone down?
They've gone down.
A lot?
They were sky high, baby. So we're talking like 7s, 7.5, 7.2. That's crazy talk, man. Nobody afforded nothing at that price. And as interest rates come down, so do the bank's test rates, right?
What's a test rate?
The test rate is the interest rate that the bank calculates the repayments on to see if you can afford them when you submit an application. So let's say an interest rate for 1 year is 5%, right? Cool. The bank doesn't assess your loan application on a 5% interest rate. They go, put a bit of a buffer on this. Let's crank that up to 7%. So that it gives them a little bit of comfort that if interest rates rose to 7%, you'd still be able to make those repayments. So if your 1 year interest rate is 7%, you still got to stack a bit more interest on top of that for those test rates, which means that it is actually really hard to afford a loan when interest rates are high.
And you just think about how much interest rates have dropped. It's just wild. I mean, we just live every day. You go kind of just going through the whole thing. But you go, they're at 7.5%. What's a 1 year fixed rate at the moment? Like sub 4.5%?
Yeah, 449.
Yeah. 3% on like, I don't know, if you're buying your first home, it's like 700 grand. That's what, $21,000 or less in interest. And for a first home buyer, that's a huge amount of cash.
100%. If we look at it over the last couple of years, so 1 year rates are 150 basis points lower than last year, so 1.5%. 2 year rates, 250 basis points, 2.5%. Lower than they were last year. That's roughly $485 a month cheaper for the average loan for a first home buyer.
And so like Westpac's come out and said that first home buyer lending is up to its highest level in more than 3 years. That's not particularly surprising, right, Mike? It becomes more affordable. House prices haven't moved yet. People are going to get out there and have a look.
Yeah, and just because of where the market's been at as well, investors have been sitting on the sidelines a bit. So, there are positive things for first home buyers, but there's some other factors in the market that do drive that.
Cool. Okay. And we've got a bit of an example of, let's say you buy a house and you get like a $700,000 mortgage on a 30-year loan term. At a 7% interest rate, your repayments are $1,075 per week. But Michael, if you are on that 4.49, where does your repayment drop to?
$818 a week.
So like if you actually look at that across the whole amount of the loan term, being on that lower interest rate, it's like $250,000 less in interest, which is just makes a huge difference for people to be able to get onto the ladder, have that security and that peace of mind before, there's the questions about how quickly will the whole thing run off. But you're on the ladder, so you're sweet.
Absolutely. So we're talking about, interest rates and repayments and the costs and the affordability. All of that is great. You got to actually get the loan. You got to buy the house. What's the first thing you need before you get that house?
Money.
You need the deposit. Now, most first home buyers think that they need a 20% deposit, and we have tried to bust this myth. I don't know how many goddamn times. You don't need a 20% deposit to buy a house. You can buy a house with as little as 5% deposit in some instances. So, I think when people are looking at deposits and buying and should I get into the market? What can I do? Should I have to hold off? Really important that you speak to someone who knows what they're talking about, a mortgage broker or a banker. But James, run me through some stats about this.
So 46% of all first home buyer approvals are now low equity, which is less than 20% deposit. And this is the highest it's ever been. This is expected to pass over 50% this summer. Average low equity first home buyer loans are about $639,000. So what's that? About a $700,000 house you'd be buying. Average 20% plus first home buyer loans is $517,000. So Michael, there's lots of people going out there with less than 20%. I think one thing I hear all the time is going like, well, I'm going to pay a higher interest rate, which maybe you should talk about a little bit as well. But going, should I buy a home and pay a slightly higher interest rate, or should I wait, save up more money so I get a better deal from the bank when I do go?
Oh, yeah. And look, it's no surprise we're a big fan of just getting on and doing the thing. Maybe at the peak of the market, just as it was all dropping off, we might have had slightly different advice. We said, maybe you could hold back a little bit here. But at the moment, we've got interest rates that have come down. We haven't seen prices start to really take off yet. You got to imagine that there'll be some sustained house price growth next year. So if you're trying to outsave a moving market, that's always going to be quite difficult. So what we generally tell people is like, if you can afford it, just get on and do the thing.
Yeah. So if we break it down a little bit, so you can buy a house with a 5% deposit, but that is backed by Kāinga Ora to the banks, which is important. There are caps on the income levels, Mike.
Yeah.
Can you recall off the top of your head for an individual and a couple what those are?
95 for a single, 150 for a couple or a household.
Yeah. And I've just had a friend apply for that loan, and their income is actually over 150 grand, but there was a couple months where they weren't working last year, which actually just got them just under the cap.
Yeah, that income cap is a rolling 12-month average. So let's say you had a promotion 2 months ago and you're a single and you went from 80 to 95 or 100, you're not going to be over the cap yet because you haven't earned that for 12 months.
Yeah. So 10% deposits, they're pretty widely accepted by the banks. If you say you're going to buy a first home and say about 700 grand, if we assume, and you've been working for a few years, if you're a couple and each of you have like 35 grand in your KiwiSaver account, you're pretty much sorted. There's the income side, which Michael talked to from a servicing perspective. But I mean, I would have thought pretty much every first home loan you're doing, there's KiwiSaver making up a decent chunk of it.
Yeah, absolutely. And I guess even with the 10% deposit loans, some banks require genuine savings. You hear them talk about genuine savings as the deposit. KiwiSaver is classed as genuine savings. And what they're meaning there is like, you can't just roll up to a bank and, okay, cool, my parents gave me 10% and I'm going to go buy a house. The bank looks at that like, well, you haven't saved any money. It's a high risk loan for us. We're not into that. So don't worry about the genuine savings piece. If you've got KiwiSaver, that bit's covered.
Another big thing that we see in a lot of our financial plans is clients going, I want to help my kids onto the property ladder. So obviously getting some help from mum and dad is pretty common as well.
Yeah, it's most first home buyers have some help from mum and dad. It's not always money. They can just like move home, pay less rent, save the rent that they were paying. But there's a number of different ways that you can get help from parents: deed of acknowledgement of debts, gifting, cross securitization, equity sharing with their property. Definitely have a chat about the way that you get the help and the way it's structured. If I give a quick example without descending into the particulars, I had a customer last week. Her mum has up to $500,000 to help her purchase her first home. She was just going to gift it to her. I was like, perhaps you should speak to a lawyer about this, because if it's a loan, a deed of acknowledgement of debt, that may help in some relationship property kind of situations, keeping it separate from being matrimonial property. However, I'm not a lawyer, so you need to go speak to a lawyer. So make sure you get some advice on that. Other quick thing to remember with a 10% deposit or any deposit less than 20%, in most cases, you're not going to get the special interest rates. So your interest rate is going to be a little bit higher. A lot of the banks have done away with those like low equity premiums where they tacked more interest on top of your interest rate just so they could get a bit more margin. And you are getting cash contributions back from the bank. So they are actually giving you a bit of cash back to help cover those costs as well.
Okay, so step 3 that we're moving to is all around actually getting the approval approval from the bank and breaking it down so you know exactly what you're playing with. And we're going to do that right after this break.
If you're listening to this and wondering what your borrowing power might be, your purchasing power, do I have enough deposit? Do I earn enough? Get in touch with the team at Lighthouse Mortgages today. We can answer all of these questions for you and help you on the path to buying your first home. Now, back to the episode.
Okay, Michael, so I hear all the time people going like, oh, I just need to get my finances in order. I've just been like on this big trip, or I actually don't think I can do it right now. I think I need to save up some more money.
Yeah.
How do we move from a hypothetical world in my head to knowing exactly what I need to do?
Call your local mortgage broker. And I have said call your local mortgage broker, not your local bank, because I'm biased. I am a mortgage broker. But call your local broker. And look, we don't care if the last 3 months of your expenses, I've just been spending a little bit more than usual. You know, it's not my usual expenses. We've heard it all before. We get it. People spend money, right? That's just the way that life is. We can tell a bit of a story around that. So when we go to the bank, we go, hey, yeah, they've been going out every night. You know, they've been spending a lot on socializing. However, once they get their home, that's going to be the focus because that is a normal thing to happen. So again, start speaking to the mortgage broker early. Even if you think you want to buy a house in the future, we can run the numbers, tell you your borrowing capacity, how much deposit you need, whether you need to close a student loan, keep it open, close that Afterpay, close that credit card, or what you need to do to actually go get the approval.
I'm smiling because I'm like, you're the ultimate hype man. You're like, nah. Susie's changed. She used to spend lots of money, but she's ready to be responsible now. You can trust her with all that debt. Is that how it works?
It kind of is. But like, it is true. Like, once you get a house, your priorities change a bit, right? Like, it is, for a lot of people, it's their first major responsibility in terms of like being an adult, you know, and like having to make mortgage repayments and having to track your rates and your insurances. And it's just part of like growing up. So like, yeah, Susie can change. Yeah, I can change it.
Okay. So why does a pre-approval matter? Why can't I just like go buy a house and then go like, yo, Mike, I settle in 3 days?
You can, and some of you do, and it's a wild ride. The risk is if you buy the house and you don't have a pre-approval in place, you can't get the funding, right? You can't get the loan to buy the house, or you can't get it in time.
Shout out to the lawyer who bought a $1.8 million house with a 90 grand salary and then was like, I'm all good, Mike?
It was an apartment. Yeah.
Don't do that. Ask before you buy. You know where they say it's better to ask for forgiveness and permission? Not in this situation.
It was also one of those really funny situations where it's like, you know, that kind of like don't shoot the messenger thing, where it's like, I was the bearer of bad news. And it was just like, nah. Like,
you and I looked at each other. You looked at me, I looked at you, and I was just like, then you were like, please tell me you've got rich parents.
Yeah. I actually have no idea how that turned out because she just stopped talking to me. But, you know, I think like, if you can't settle a property, worst case scenario, you're in for a world of hurt, right? 15% is usually the default interest rate, can be a little bit higher, can be a little bit lower. You know, you'll be paying that until you can settle a house. It's so risky. It's not worth doing. You know, you always hear people talk about stories on the margins, right? The classic, like, oh, well, I heard this person did this and, you know, it worked out really well. And like, yeah, most of the time there's some GST added, they're lying. Or if it's in the case of like, oh, this person bought a house without any finance, and like, yeah, they're probably a property developer.
Yeah.
You know, so they probably know or they're a real estate agent. They know what they're doing. They work in the industry. They can settle it. Assume that is not you. Just do the logical thing. Get the pre-approval first, then go buy the house.
Yeah. And the main thing is just like contact the mortgage broker and be like, here's my income, here's my deposit, here's kind of like what I'd want to be able to do. And they'll just take you through the process. They'll coach you through it.
Yeah. And one of the other reasons is we will also talk you through the entire purchasing process. And, you know, this kind of leads into our next tip, but I had someone call me a little while ago this year though, and was like, I can't settle this property because I can't get insurance on the property. And I was like, hey, well, when do you need to settle? They're like, I settle tomorrow. And I'm like, oh, okay. Like, talk me through what's going on. And they ran me through their situation, and it actually had nothing to do with the property. They couldn't get insurance because of some actions that they had taken in the past. And, you know.
What, like illegal actions?
Yeah. And if you talk to a mortgage broker and we're talking to you about insurance on the property, and I'm always telling people, go get an insurance quote. before they even bought this thing, if they were coming through a mortgage broker or us, I would have said, like, we would have found out about this a long time before they had to settle the property, right? I called the network, got a bit of a plan together, called them back and was like, hey, mate, this is not advice. You can't ever call me back. Here's what I've spoken to some people in the insurance industry. Here's the only thing we think you can do.
Yeah.
All the best in your future endeavors. Avoid that situation.
Was it fraud? Was it?
They had committed fraud in the past. Yeah. So and I wasn't telling them to commit fraud again. It was a way we could structure it where they were still a party to it, but they weren't the actual insured party. So again, like very stressful at the 11th hour, not so stressful if it's like 3 weeks before and we can sort this out.
Yeah, for sure.
So just work with people who know what they're doing.
Okay, all right. Well, let's jump forward, Mike, to step 4, which is all about due diligence. So you've met your mortgage broker. They've told you how much money you can spend.
You haven't committed insurance fraud.
You haven't committed insurance fraud, and good on you for not doing that.
Yeah.
You've found your house. It's conditional, and you're working through your due diligence to go, is this a good property? Talk us through it.
Yeah, cool. Different properties require different levels or types of due diligence. If it's a new build and we're buying off plan, you'll need property solicitor to look through the contract, through the plans. It's not like you can go look at the house if you're buying off a plan. You'll need a registered valuation so they can tell you what it's going to be worth once it's done. So, that's a hypothetical situation. I'm giving you money on the promise of buying a house at some point in the future. So that's where the due diligence needs to be focused. If you're buying an in situ property, one that already exists, you can go look at the house. You could get a building inspection, knock on the walls, go, doesn't this seem great? You can look at the neighborhood, the neighbors. You can see if it's in a floodplain, right? So there are different things you'll need to look out for. Some properties, based on when they were built and what they're built of, they might require some additional due diligence. If it's a plaster house built somewhere around 99 or 2000, you might need a moisture test on that property to make sure it's not leaking. Again, there's a ton of different pieces of due diligence that can be done. I'm not going to deep dive into every single one because we'll be going through this list for like 5 hours. But again, I think the point comes back to, if you've got a good team around you, you should have information on this before you're even near purchasing, right?
Yeah.
Like if you come to me and say, I want to buy this house and it was built in 1999 to 2000, the first thing I'm going to say to you is like, great, before we do anything else, you're getting a moisture test, right? You're going to get a building inspection and a moisture test because that'll be the first thing that the bank asks for, right? And usually when we're doing due diligence, we're trying to do it from the cheapest thing first to the most expensive thing last. And I think that's really important. First thing, let's agree on the price if we can. If we can't, like it's an auction, cool, we'll just go straight into the DD. First, we get the bank to tick it off. Bank says, yep, I'm happy with this property at this price, and here are the conditions on it. Cool, great, bank's happy with it. That didn't cost you any money. Then usually a building inspection, $400, $500. The next kind of most expensive thing is the building inspection, so we do that. Then if we're happy with all of that, then we get the solicitor to do the due diligence on it because that's the more expensive thing, right? So we try and stack it in an order where if something falls over during the due diligence process, you haven't wasted all this money.
Yeah. And if you're going, that sounds a bit expensive, doesn't it, Michael? It's a few cooks in the kitchen. You're borrowing hundreds of thousands of dollars.
Or millions. Sometimes you're borrowing $1 million.
Hopefully not too many millions if it's your first home, unless you're doing really well. But it's a huge commitment, right?
Yeah.
And the amount of people I've run into over the years where they've just made a huge mistake with this. They've run into something they didn't expect and they didn't spend, $1,000 or $2,000 on DD. Then they've realized there's, a river running through the backyard or there's a rotten wall in their house or the whole thing is leaking. It's so much liability from just being like, I'm going to make sure that what I'm buying is reasonable.
Yeah. The amount of times I have firm discussions with clients about a building inspection is wild. Where I'm like, nah, come on. Like, we're going to like my mate Tim, he went through it and his dad's a builder. And he reckons it's sweet. Is actually crazy.
Yeah. And that brings me to step number 5, which actually comes back to the due diligence piece, is how you buy the property. So for probably the last couple of decades, the large majority of purchases have been done in especially in the major centers, by auction, right? And that means you have to do all the DD beforehand, and you might like spend like $2,000, $3,000, $4,000 and just get destroyed in the auction and never have a chance in the first place. But the huge thing right now is not much is going by auction at all, is so much stuff you can put under contract by negotiation and come back to it and go, I'm going to spend this money, I've agreed on the price, and work through it.
Yeah, absolutely. And like, there's ideally for first home buyers, purchasing by negotiation or a deadline sale is the best, right? So negotiation, very easy. It is what it says on the tin. You negotiate on the price. If you guys can agree on the price and the conditions, great. You put it under contract and then you have some time to do the due diligence. That's perfect, because when I came back before about doing the due diligence, I said we start with the cheapest thing first. The very first thing I said is, can you agree on the price, right? Because it doesn't cost you anything to agree on the price, right? So if you can do that first, beautiful. Negotiations, a great way to buy for first home buyers. Deadline sales, a little bit different, right? We've got a date that all the offers have to be in by, and then basically we're going to decide on that date. A little bit harder to negotiate. You kind of need to put your best foot forward because it's effectively a blind negotiation where they're just kind of picking between some different offers. The worst one is a tender.
Actually, the way you describe deadline sales kind of sound a lot like tender, to be honest.
They're a little bit different because you can negotiate, right? A tender, they're basically like, we're going to pick one offer to kind of go for. Yeah.
Although I've definitely been the tender where I wasn't the highest offer, and then they came back to me and were like, want to put a bit more forward?
Yeah, look, mate, I'm not speaking to the morality of real estate agents here, right? We're talking about the way to buy a house. Yeah.
So look, there's your 5 tips on why right now it is easier to be a first home buyer. The big thing is going like, is it the bottom of the market? Is the market going to soar tomorrow? You look at all the data, Mike, and you go, look, I don't know how quickly it's going to start moving again. There's risk that it moves for sure. But the big piece is if you're buying for the long term, is it going to get any better than it currently is? What do you reckon?
Yeah, look, it's like they always say, right? The best time to buy a house was 10 years ago. The next best time's today. So look, I'm a big fan of just getting on and doing the thing. So long as you have a good team around you, you are taking the right steps and you're doing it in a logical order.
Yeah, shout out to all the memes out there of like, here I am in my mum's womb when I should have been out being a property mogul. We'll wrap it up right there. If you do want to talk about buying your first home, there'll be a link in the show notes to book a time with the mortgage broker. Please make sure to subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers.